They've been working hard to keep this information from you, but I'm going to give you everything today. You came here for the truth, so let me unveil that for you. In today's video, I'm going to break down the information that the Federal Reserve has actively been trying to prevent you from knowing. It's going to affect everything that happens in 2024. I'm going to show you the quotes. I'm going to give you the actual facts that will occur in 2024 before it happens. Now, what I can see here is that 2024 is going to look a lot different than 2023. Yes, it's an election cycle, but more importantly, this is a business cycle. And I'm going to explain the details here. Okay. The very first thing we have to understand is March Fed rate cut odds have gone up quite a bit over the last several months. In the last, few weeks here, we have seen a change. What does this mean? Well, we are expecting a big deal for March. Are they going to start cutting interest rates? This is where the party gets started. This is when the DJ puts the music on for the first time. March of 2024. You have to understand, if you want a party, you got to put the music on, and that is March 2024. Why do I say this? There are three events that are occurring or expected to occur March of 2024. If they do occur, or even if we get, let's say, 2 out of the 3, then this basically gets the party started. People start getting on the dance floor. When we have that, it essentially means that we are going towards a more inflationary environment. Yes, we could have a recession. Yes, we could have multiple bank failures, and there could be an expansion of war. It could be anything, but that's as of today. And so what we're seeing right now, although there's been a little bit of a change here, is that the market expects, and by the way, the market in terms of futures and swaps, these complicated financial instruments are more accurate than when you have like analysts or even the Federal Reserve themselves. That is a fact. So we know that when the market says this is likely to happen, it probably will. Not 100%, but probably. And so right now, there's a little bit of a change, and we'll show you why. So this just tells us that the expectation of rate cuts is soon. Okay, look, maybe it's not March. Maybe it's the following. Maybe it's the one after. But June is also another one because we have to start looking at when quantitative tightening will begin. We'll get to that in a sec. Well, what we can see right now is Bitcoin. I think this is one of the best bellwethers of risk. People's risk tolerance. It gives us an idea of what happens to people when there's easy money. Easy money, all right, let's go in all the way on Bitcoin. And then it goes from Bitcoin to the super risky, like ridiculous coins. It just keeps going down, 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 down until, let's get safer. Let's tighten up a little bit. Then it starts to move back into Bitcoin as well as your Tethers, USDC, all these so-called stable coins, because they want to balance that out. They don't want to pull that back into the traditional fiat financial system. They want to leave it there. This is part of that cycle. And we saw that Bitcoin hits, almost 70,000 and crashes down pretty hard. FTX, all that. But now as it stands, Bitcoin has come up all the way to past 47,000. Of course, this is on the back of, a few events, including the ETF that is supposedly finally going to be approved. I don't think the ETF is that big of a deal in terms of, I think it's just news that this all being played on. It's risk tolerance. First Bitcoin, then the growth stocks, and then other things all behind it. That's the flow, the general flow of things when we talk about easy monetary policies. That's what happened before. We don't have too much history, but with what we do, that is the pattern. And right now, Bitcoin has been going up and up and up. And it hasn't got that much attention up until just recently. However, 47,000 isn't that far away from where we were before. And they haven't even cut interest rates yet. So I think it's important to look at Bitcoin. I don't necessarily cover it because just the price action itself, You could look at that any day you want. But when there's some news, I do like to touch on it. You could see what's happening with the consumer. Obviously, with interest rates the way they are, mortgage rates the way they are, this is burdening people. I've talked about the buy now, pay later, and this is just showing us that people added a lot of credit card debt and shouldn't be expected. It should be expected because, of course, holidays and so on. And some of what has happened, if you're in the retail space or on e-commerce, what happens is generally with the gifts and things that people are getting, they're getting a lot of gift cards. That happens to be something that people will spend in the following days and weeks after Christmas. But in this case here, they seem to be using their credit cards a lot, and as this shows you, over 20% interest rate. It is, they're never going to pay it back. Let's be honest about that. Okay. And so that's the consumer. That's the situation we are in. And March 2024 is the beginning. But we're going to go further than that right here. So this is Nick Timiraos. Nick Timiraos, if you don't know, works for the Wall Street Journal. They call him the Fed Whisperer. He kind of leaks information into the media so they can get a reaction from the markets as a result of it. Okay. So we're talking about Lori Logan, which I covered in the previous video, the one with Jerome Powell screaming on the thumbnail. If you haven't seen that, definitely check it out. So Logan comes out, says a speech. I'll show you the speech in just a second. But that kind of, spooked the markets. And what we're talking about here is QT. She says they should slow the Treasury runoff as overnight reverse repo balances approach a low level. That's something analysts say could occur by mid-year. That puts us into that June, July timeframe, and that's right around when the Fed has their meetings. You see what I'm saying here? Isn't that so interesting that we have this taking place? This is interesting because of what we can see with the Federal Reserve, their actions, and everything that will happen in 2024. But I'm not done. It gets even deeper. Let me show you. Slowing QT reduces the likelihood that we'd have to stop prematurely. So if you watch that video, you've already seen this. So what they're doing here is they're trying to mop up excess liquidity. They're doing that through quantitative tightening. They're doing that through the reverse repos. And of course, interest rates, the way they are, all of this trying to tighten. There's just one problem. They haven't done that. It's actually gone the opposite direction in what they are trying to achieve. And yet the market is already saying, that's enough already. I want this to end. Cut rates in 2024. And that seems to be the way it's going. It's funny because of all said it, all from the Fed. We are going to keep rates higher for longer, but we're going to cut rates. They can't even get their message straight. Sometimes in the same exact speech. All right. So I know you probably can't see the font is pretty small. Trust me, I'm on the same page as you and my face is right in front of it. But here we go. Okay. What they're basically saying is you should read it. I think you should read the speech. It's not, fun and exciting. It's not a Mr. Beast video blowing up a house and a train and so on. But it will affect you, your family, your friends, your coworkers, your businesses, and so on. Turning to the Fed's balance sheet and policy implementation, we have reduced our securities holdings since mid-2022 at a brisk pace, consistent with the principles and plans that the FOMC outlined and so on. Okay, great. The securities holdings have declined by $1.3 trillion from their peak. So they were at $9 trillion at the peak. They've come down $1.3 trillion. Bank reserve balances have actually risen by $350 billion to around $3.5 trillion. Okay? What is a bank reserve? This is exactly like it sounds. So imagine your commercial bank. You go in, you deposit cash at the commercial bank. That commercial bank then takes their excess and they say, okay, I'll keep it at the Fed. When they're doing that, they're basically saying, I just need to park this cash here. I want to make some money on it. And the Federal Reserve is going to give me some cash back. Those reserves happen to be consistently, as I dictate, in the money mirror method. Through that, you will see the reserves and the stock market correlated. So you say to yourself, the stock market has not performed well, and the stock market has performed well, but during this time it shouldn't perform well because there's been quantitative tightening. No, there are so many factors which are here, and the reserves are so key. So as long as those reserves keep going up, it could make the stock market do very well. And you think it's about Apple's sales? You think it's about Boeing with the airplane door falling off? You got to broadly look at it. You got to zoom out, and you got to see it over a period of a year, not over the period of a week where you get some news that send things one way or shape or form. That's because reduced balances in the Federal Reserve's overnight reverse repurchase agreements is the reverse repos. That facility has more than offset the decline in securities holdings. Increased treasury issuance and a less uncertain interest rate path have contributed to the rapid runoff by motivating money market funds to invest more in treasury bills. So we're getting complicated here, but anyway, you can read the whole thing. But you see what's being said here. We've been doing this quantitative tightening thing. We are trying to slow down inflation, and yet, in this case here, it's the exact opposite occurring. I mean, I can't believe it. It literally says they more than offset the decline. Everything that they're trying to do, because they haven't done it strong enough, has resulted in what we can see in the stock market and other risk assets. So you have to get this through your head here. What do you expect for 2024 by already talking about quantitative tightening come mid this year and the potential for rate cuts, or at least talk of rate cuts in March of 2024 with these reverse repos? Think of that like the janitor mopping up all that excess liquidity, all that cash floating around. That could potentially, if it continues at current pace, go to zero in March of 2024. These things are lining up. By the way, March of 2024, we also have another factor, which is the BTFP, the Bank Term Funding Program. That's the thing that those emergency loans, all right? The emergency loans were supposed to be an emergency, temporary. They set it up for 1 year. That comes up in March 2024. Do you see? It's all lining up. We can expect some serious stuff to happen between March and that June-July timeframe. Stay tuned to the channel. Hit that thumbs up. When you're subscribed here, you're going to get the latest and greatest. I know it's not Mr. Beast blowing up buildings and all kinds of stuff. I get that. I know. I'm not Mr. Beast, but I think it's extremely important. Okay? All right, looking at this, you can just see the financial conditions that Logan, by the way, did talk about. There are different measures of financial conditions. She like breaks down several different types. The point here is that even though interest rates are high, financial conditions have eased considerably over the last few months, okay? And that's like leading up into the Federal Reserve cutting rates. Your currency is going to be devalued no matter where you are around the world, but these are the worst performers of 2023. Lebanon, my goodness, minus 90% worse than Argentina. And so when these type of things happen, I think it's important to understand the currency you're holding every single day is being devalued. Here, I'm just showing you about home and auto insurance. I just wanted to bring in the fact that, look, everything has become more expensive to you, and that's your currency devaluing. Don't think of it like, hey, the insurance companies are ripping off. Yeah, they always want to rip you off. Every company wants to. The car companies want to. You go to the store, they want to. You go to the restaurant, they want to. Everybody wants to take their pound of flesh. And in this case here, we got to do what we can. On the Sunday sessions, Sunday live sessions that I have, that is the number one way. The number one way. And the group that I'm with right now, these people are really, one by one, they're all going to be getting themselves out of this mess. And they won't have to worry about that currency devaluation. And I'm there to help them along there. On the Friday sessions that I have, the Friday Live, Finance Friday Live, These people know all about the money mirror method. They know all about the reverse repos. They know all these things before I bring them out onto YouTube, because before they're refined and I have all these things lined up, I'm giving it to them raw. So if you want to join any of those, there's a link in the description, Money GPS Live. You can check that. But if you are in a circumstance where you need somebody to look at your financial situation, you're like, look, I just need somebody to take a look, give me some advice, whatever. I have linked up with the Money Pickle group. Money Pickle will get you the CFPs or fiduciaries that you need, and the call is totally free. 45-minute call. Link in the description right at the top there, Money Pickle. I hope that you will get that. I got some great feedback so far. I want to thank you for being here today, and don't forget to check me out tomorrow because I got the latest and greatest for you. Take care.